How much money do I need to start investing in rental property? This very well may be the most popular question asked in all of real estate investing, and for good reason. Many people think it takes a ton of money in the form of a down payment or funds that you need to be able to even begin to start investing in rental property. And in this video, I'd like to cover how much money you need and 3 of the ways that I have bought most of my rental property and how you can do the same. And so let's first address the question, how much money do I need to get started to buy rental property or invest in real estate? And the answer is it depends. It depends on what you're buying, what asset class you're focusing on, and more specifically, how you decide to fund these properties. Who is going to be your partner with the money? That will dictate a lot of if you need a down payment and how much. And so let's dive into the first way that I went through to buy my first rental. The old adage 80-20, you need to have a 20% down payment to be able to buy investment property. This is something that most people believe, and why they do not start investing is because they don't have the 20% down payment for the property. I believe this same thing when I got started. In fact, the first couple properties I bought, I put 20% down as a down payment to buy them. And so the first piece that I was mentioning here is using your own money. Maybe you have a good job, you have some great savings, and you're just finally ready to take the plunge and invest in real estate. And so this is pretty straightforward. You would go to a bank and they might tell you, hey, I need a 20-25% down payment. Whatever you're buying, you calculate what that might be. You bring the funds to closing, and there you go. You sign the paperwork and you have a rental. That is probably the option that is the easiest to understand, but not the most feasible for most people. And so we get into number 2, which is using bank financing. Now, this is the way I have bought most of my rental properties, and I own well over 100 of them today. And so not only are they financing the 80%, but depending on what banks and what loan products you're using, some banks will not require a down payment at all. If you're able to buy the deal good enough and there's enough equity in the property to loan you the money, and then also have enough in the property where it's not completely maxed out, they will loan whatever they need to, and you may not have to come out of pocket the 20%. A really good example of this is for very simple math. Let's say an after repair value or an ARV property that you're going to buy is worth $100,000, but you are going to buy the property for $50,000 and then you're going to rehab it to make it worth the 100. So if you buy it for 50 and the bank is willing to appraise it when you buy it, what it will be worth after you rehab it, let's say again 100,000, they may lend you 70 to 80% of the 100,000. And so in that case, they will buy the property for you, which was $50,000, and then they will give you up to 70 or 80,000 in total, leaving you with $20 or $30,000 to rehab the rental, which is awesome. So I use a handful of banks that do exactly this, and your responsibility is to run the numbers effectively and make sure it's a really great deal, that you're buying under market value, and you can have some money to to rehab the property and make it worth the 100,000 or whatever it was appraised for. If you are not sure where to start and this sounds super confusing, just check the description below. I'll leave a link to my property, rental calculator, where I go over how to put these numbers in, where to find them, and make sure you're buying a property that has really good equity in it, as I just explained. And so if you're able to find that, that's probably the best way to get started. You don't have to use a ton or any of your own capital. The banks will fund all of the projects for you, and then usually they'll allow you to keep scaling because these properties will start to generate rental income once they're rehabbed and rented. So that was number 2. The third way is to use private lenders. I think this is a great way to raise money to buy property, because private lenders just simply means it's a person lending you money and not an institution or a bank. And the great thing about this, you can create win-win scenarios, meaning it's a win for you because you're raising the capital that you need to buy the properties. And it's a win for the private lender because they're able to get a preferred return on their money and know it's protected by real estate and something that is tangible that they can see and touch. And the really nice thing about using private lenders is pretty much anything can be negotiated as long as you both agree, meaning of course, how much money they're going to lend you, what the interest rate is, the payback, how often you will pay them, the returns. All of those things are points of negotiation, which is great because, again, as long as you both agree and create win-win situations, it is going to be a great deal. My recommendation for you, if you go the private lender route, there has to be obviously a lot of trust built up with the folks to give you their hard-earned money. And so I would document everything in writing. how much they're going to give you, when the payback period is, how much of an interest rate you're going to pay them, when those payments start. All those things can be ironed out in a promissory note and make it very clear for each of you to understand, and each get a copy of that. That way you know exactly where you should be. And so I know I said 3 items in this video, but I guess number 4, we'll call it a bonus. If you are low on funds or don't have a ton of money to put into real estate right now, but you really want to get started and you've been learning, you can go out and find a partner to maybe bring the money. And so one thing to note about this with partnerships, again, there needs to be a high level of trust there, but also both parties need to bring something of value to the table. So obviously the person with the money, the thing of value that they bring is the capital, the funds to be able to buy the property. And for you, you will bring the sweat equity, the knowledge, and all of the things that the money doesn't have, which is probably the time to find the deal, talk to the bank, get the financing lined up, the rehab project, how much that's going to cost, and really facilitate all of that. And even after the property's purchased, you'll probably want to have management in place yourself or figure all of that stuff out to make it really easy for the investor to say yes. So same thing with the promissory note. If you go the partnership route, very, very important to understand to have all of this stuff in writing. That way it's not anything that's assuming on one end or the other. Make sure you have a signed operating agreement on which you both agree on. And then the other part of having a partner is really knowing, again, the roles of each person in this deal. Money, again, very simple. If their obligation is only that, but you knowing what you have to deliver on. And so a couple tips if you're brand new and don't have any partners or any people that you know with money, start to network at local events in your community that work towards real estate investing. And probably the easiest way, and especially in this internet world that we are in, is join local groups online that are in the real estate world. So you can get in Facebook groups, LinkedIn groups, and really start to comment, negotiate, and figure out what folks are looking for. And I know the ones that I'm a part of personally, there's always folks that are looking to invest or have really great deals to buy. And if you can get really great deals, usually you can attract the money to be able to purchase those and operate them. And so those are the 3, or technically 4 ways that you can get started and not only find the money, but potentially get into deals with no money if the situation is right. So I hope you found this video valuable. If you did, please like this video, consider subscribing to the channel. Each week we cut videos on real estate investing and how you can get started as a 9-to-5er with a full-time career and looking to build wealth for you and your family. As always, thanks for watching. I appreciate the time. This video is a wrap. Bye for now.